Michelle Smart. I'm an enrolled agent, and I'm trying to keep you updated on this roller coaster ride of the employee retention tax credit. So the IRS has updated their website. Here we have more warning signs. If you have done your ERC with somebody who knew what they were doing, then they followed, okay, 5 new things on the website. Okay, like we didn't know this already. Essential businesses that were fully operational and didn't have a decline in gross receipts. Check, we already know this. Businesses who can't support the governmental order, businesses reporting family members' wages, using wages that were used for the paycheck protection program, wages, employers who had more than 100 employees in 2019 qualifying for the year 2020, and in 2021 you couldn't have over 500 employees in the year 2019 as your qualifier year. Nothing new, but it's just like more scare tactics. And then there's a promise for something new that's going to be coming out. So here we have an escalation again of the COVID credit denial letters being sent to businesses who are already in distress. Here are the denial letters. Here's one of them. Thank you, Ashley Hall. On LinkedIn, here is a copy of one of the letters. We cannot allow your claim. So just be aware, if you get these, you need to talk to your tax professional. People have been pretty disturbed by these letters that have been coming out. And here are some of the scenarios with these letters of denial, which made no sense whatsoever. Again, remember the IRS said something like 60 to 70% of the claims were probably not correct. And look how they're sending out these denial letters. Okay, scenario 1. This is from another CPA that I'm following. If the taxpayer is a disregarded entity, that means you're a sole proprietor. Sole proprietors do qualify for the ERC if they have employees and they file a 941, but they don't necessarily have a separate EIN number. They still qualify for the ERC scenario. This is where they're getting denial letters when they qualify. So it's incorrect. What the IRS is doing is incorrect and obviously incorrect. So taxpayer claimed ERC in fourth quarter 2021. That is allowed if you are a recovery startup business and you check box 31B. Scenario 3, the taxpayer claimed multiple periods in 2021, and they also, this is a big red flag for them. If you put in a 941X for the ERC for third quarter 2021, because a lot of the suspensions ended in second quarter. Most of the suspensions, not all of them, I know in California, ended in second quarter 2021. However, I have had multiple clients who qualified by partial suspension in all through until third quarter 2021. They added the reduction in gross receipts and they qualified. So these people are sending denial letters and they're not correct. So just some notes there. I wanted to go over this protective claim. I talked about this in a previous video. And what we're talking about, here's this another Justin Alien CPA who was posting this according to a lawsuit in a DOJ. What we have is this double whammy for people claiming the ERC. They are just pounding into the ground. Here we have a situation where we are ordered to go back and amend the years that we used the wages for the ERC. So we have to go back to 2020 and 2021. And because of the ERC, we claim additional income. Remember, we're crediting wages, so the wage expense is reduced and more taxes are due. So if you go back and you amend that and you pay your additional taxes, then you later on down the line, 3-4 years down the line, the IRS says, no, you didn't qualify for the ERC, you owe it back to us. You cannot go back and amend that return because it's out of the statute of limitations of how far back you can go to get a refund and file an amended return. And this is why we're saying proactively to file a protective claim, because it's kind of an outrageous thing. You've got to go back. You get your ERC money in 2023. You've got to go back and amend 2020 and 2021. And then if you fall out of that statute of limitations and you're denied the ERC after you've got it, you can go back and get that money back. In other words, according to this DOJ and according to this lawsuit. So this stuff just goes on and on. So if we go back to the CARES Act and exactly what happened in that, the CARES Act told the IRS to publicize and promote the employee retention tax credit, as well as the other credit programs that were available. And now what's happened is they've turned around and demonized it and made it so difficult that a lot of people have not filed, especially since the moratorium came down and all these warnings came down, that people are not getting their refunds quickly. They are demonizing a program that they were supposed to promote. And I think Werfel is the commissioner of the IRS is way out of bounds on what he's doing. And the lawsuits are stating that the IRS is out of bounds. And these lawsuits are saying that the IRS have violated the Administrative Procedures Act, or the APA as it is commonly known. And this means that the IRS or any agencies of the government do not really have the right to go and define the law that was put into act by Congress. So these are the violations, is the violation of the APA, and a lot of the how this is going to turn out is going to be dependent on how those lawsuits go. So we're sitting around waiting for that. In the meantime, more people that could have qualified are not filing to get the ERC. We've also seen that the overturning of the Chevron Act is just the cherry on top as to the violations of the APA. Again, it's taking power away from the agencies of the government for them to be defining these laws. And I think Werfel is just way out of bounds in what he is doing and just hanging on to other people's money. People who have these credits and other credits and balances that are due from the IRS to them. I'm seeing more and more the IRS just hanging on to that money. And when you call the IRS, they just will not give you any information as to when you're going to get that refund. So I want to share with you, another lawsuit against the IRS from the VIP Hospitality. And I will leave a link to this so anyone could download this. So I have a case actually that's very similar to this. They are not in litigation. However, it's similar to this case where basically they applied for the ERC. It was shown that the IRS sent them a check out. They sent it to the wrong address, and this person immediately filed the particular form for the IRS for change of address. The IRS got the form, and the IRS has still, as to this date, not responded. They've called the IRS and called the IRS, and they're getting what I'm getting when I call the IRS is don't know, can't say, don't know when you're going to get paid. It used to be a few years ago, they would tell me that'll probably go out in a couple of months. It'll go out on this day, it'll go out on that date. Okay, as soon as we get this form, it's going to go out. No, it's not happening. It's just, I cannot even understand this. It's so outrageous. The IRS doesn't have the authority to hang on to this money, literally 2 years, 3 years, and people are waiting, having to file lawsuits just to get a $20,000 refund given back to them. So we're just going to keep watching this and see what's happening with the lawsuits. And all of us need to be making a lot of noise, contacting our representatives. This is absolutely the polar opposite of what the CARES Act was written about, and how the IRS is supposed to act in accordance to the CARES Act, which is to promote this. Yes, they should have jumped on top of the fraud in the beginning. But you know what? 10 months of waiting and sending out these letters of denial to people who legitimately qualify is absolutely outrageous. So please give me a like so more people can see this, and I will try to keep you updated on any new lawsuits and any new information. The IRS has promised that there's some new announcement that's coming out this next week, I believe. So thanks for watching. I'm Michelle Smart. I'm an enrolled agent.